So good evening, everybody. Thank you for being here tonight. I really don't just want to talk about property. I want to talk about a transformation that's happening in the northeast of England that too many investors are overlooking. This region is no longer a hidden gem. It's become the beating heart of Britain's regeneration story across the northeast. And within it lies several hotspots. And one of tonight's hotspots is a town called Hartlepool. I'm Keishan Pillay. I am the founder of Clap Property Group, and my mission is simple: to build your future one property at a time. Tonight, I'll show you why the Northeast is such a compelling opportunity and why Hartlepool is uniquely placed. With the right funding strategies and smart decisions, this can help you avoid mistakes and unlock exceptional potential. If I can please ask for this evening, guys, if you have any questions, if you wouldn't mind holding on to them to the very end of the presentation, so I can give you my undivided attention. Thank you very much. So our agenda for tonight, we'll go through a bit about who we are as a business, why we focus on a specific corridor in the Northeast, why we've selected Hartlepool as our spotlight town this evening, some strategies, funding strategies that should be looked at and how you can utilize them to your benefit, some mistakes to avoid when starting to consider investing in property. We'll talk about a live use case and an active deal we currently have. And at the very end, we'll have a Q&A and some next steps. So who we are, at Clap Property Group, we have facilitated over £1.2 million worth of transactions this year alone. And that's covered in a very, very specific corridor. That's from Blythe down to Middlesbrough. We specialize in buy-to-lets, BRRR strategies. Sorry, I just need to admit some more people in. We specialize in buy-to-lets, BRRRs, and HMOs. But more importantly, we're specializing in helping investors avoid making costly mistakes. That's through building confidence by education. That is exactly why I run these webinars. I've been publishing a weekly blog for more than a year and a half now, which ultimately led me to write the book called The Property Deal Finder's Handbook, which is available today on Amazon. But success in property doesn't come from luck. It comes from knowledge, strategy, and education. So why the Northeast? When you consider investing, you've got to look at fundamentals. And those three fundamentals, let's break this down in the Northeast. Affordability. Property prices are significantly lower than the UK average, while rental yields are certainly among the highest across the country. And then, of course, there's regeneration. Billions of pounds is being poured into major projects that will reshape this region for decades to come. Affordability certainly gives you the access. Yields gives you the cash flow, and regeneration gives you the growth. And when you put those three together, it gives you an investment market like nowhere else in the UK right now. That's certainly in our experience. Our spotlight town, which is Hartlepool. The average house price in Hartlepool today is between 113 and 115,000 pounds, with rental yields that are achievable between 8 and 10% with the right locations. HMOs right now is in such big demand in Hartlepool, and average rental yields are between 15 and 20%, which is certainly phenomenal across the rest of the country. But beyond the numbers, Hartlepool has its own regeneration story. The waterfront and town centre investment that's reshaping, with millions of pounds being invested towards the town centre and the marina, which is ultimately creating, attracting new businesses, creating culture, and of course, creating leisure. But it isn't about the jobs. It's about people that wants to live, work, spend, and invest in Hartlepool. This recent talk, in fact, planning have gone in now recently for a nuclear power station, specifically in Hartlepool, where they're looking to build up to 12 nuclear reactors in Hartlepool. And they estimate that they'll growth of around about 2,500 jobs within Hartlepool itself. So when you combine Hartlepool and its own regeneration story between the likes of the Teesworks project and the Sunderland Hollywood of the North project, you create a hotspot that's sitting right in the middle of this transformation zone. Let's bring this transformation together and give you the power of regeneration that's going on across the Northeast. When we talk about the Teesworks project, it's the largest free port across the UK. In fact, I believe it's one of the largest across Europe at the moment. It's an industrial powerhouse for advanced manufacturing and green energy. It has already created upwards of 2,500 roles across the site. And they expect to grow up to about 10 to 15,000 people over the next 5 to 7 years across that site. So think about that. Those are a lot of jobs coming into the market. And when you add the multiplier effect, and what I mean by that is for every one job created within a project, a further 1.5 roles are created externally on that project. So that's everything from your supply chain and your logistics companies to cafes and restaurants. This means tens of more thousands of jobs are being created across the wider Tees Valley. If we look at Sunderland, Sunderland in its own right is a very well-established economy. It is the automotive hub for the UK, with Nissan being one of the major employers in the town. But with Hollywood of the North, this is the new Crown Work and Television Studios that's being built, a £450 million investment. And they're looking to create upwards of 8,500 roles across the Northeast. And they estimate that it will generate for the local economy upwards of £330 million per year. And when you add that multiplier effect into it, you're upwards of 13,000 jobs across the Northeast, which is including your local services, your shops, your restaurants, your housing markets. Now, here's the thing that most people miss. Hartlepool sits right in the middle of this massive regeneration that's going on around it. And of course, it has its own story. But if you think about the tenant profiles and the different strategies you can have within Hartlepool, because specifically of the Northeast, the Sunderland project, think about the actors, actresses, the film crew that's coming in. The strategies that could work here is your high-end serviced accommodation, holiday lets. And then, of course, you've got the operational staff, the videographers and the crew that would like shared accommodation because these are young professionals. And Hartlepool is the perfect town because it is a seaside town. And think about the tenant profile that will change over a period of time within Hartlepool because it is a seaside town, and the demand for housing within the area. So let's look at funding. Funding for me is the lifeblood of property investing. Let's be honest, right? Without it, we wouldn't be able to do any deals whatsoever. It can certainly make or break your portfolio. Buy-to-let mortgages, for many investors, this is the stepping stone. You look at your interest-only mortgage that allows you to maximize your leverage and build cash flow quickly. But not all lenders are the same. You need to understand which product fits your strategy. For example, some lenders may like HMOs, while others don't want to touch them. Knowing who to approach will save you time, and it will save you from those rejections later down the line. One of our favorite strategies at Club Property Group is bridging finance. It's short-term, it's fast-moving capital. It's perfect for projects that aren't ready to be mortgaged. So think about those run-down terraced houses right in Hartlepool that you can convert into high-yielding HMOs. A bridge loan gets you in. It allows you to do your refurb quickly. And then you can refinance onto a buy-to-let mortgage. Because and of course it absolutely costs more money. We all know that there's always a cost to a bridge loan. But speed and flexibility often is worth far more than cheaper rates. Joint ventures, we work with a lot of joint venture partners that want to work with us because you're able to scale fast. You know, when it comes to joint ventures, you're able to pool your resources and go after much bigger projects that you wouldn't possibly have been able to go after on your own. But the key thing is transparency, and it's got to be a win-win. With joint ventures, you need to have clarity on your role, clarity on your exit, clarity on your returns, because ultimately it will avoid those pains later down the line. So being transparent with everybody throughout the entire process is the key requirement for a joint venture. And then finally, arguably the most unsexy bit about property investing is stress testing, but a very, very essential part, let's be honest, right? So when interest rates rise or tenants move out or your refurb overruns, you know, when you put these into your numbers and the deal still stacks, then you definitely have something you can pursue going forward. But if you don't, you will absolutely bleed cash. This is where most investors fall short. They chase the perfect deal on a spreadsheet. But let's be honest, property doesn't live on a spreadsheet. It lives in the real world. So when you plan for those surprises, you'll survive. If you don't, you will absolutely bleed cash. Mistakes to avoid. So, you know, we've seen so many investors go down these rabbit holes and traps they fall into again and again and again, underestimating your refurb. Every refurb looks absolutely simple on paper. But when the builder lifts the floorboard up, all of a sudden there's a hole in your budget. It's always so important to add that 10 to 20% contingency, not because you're being pessimistic, it's about you being realistic. And the good news is, if you don't use it, it's part of your profits in the long term. Too many investors buy cheap property, but cheap property does not mean a profitable property. If tenants don't want to live there, or the local job markets doesn't support your tenant rent demands, the property very, very quickly becomes a liability. So it's so important to understand the micro locations. You know, you have to understand where people want to live, work, and commute from. Because after all, it's certainly not about property. It's about people. Over leveraging. Expansion absolutely feels amazing. But when you're stacking debt without a clear exit strategy, you're building a house of cards. We've seen too many investors undone, not by bad deals, but by the lack of liquidity. When interest rates rise or tenants move out, it's so important to keep a reserve because the strongest portfolios aren't the biggest. They are the most resilient. And to be honest, my biggest bugbear about property investing, and truthfully, I was probably one of them when I first started, that set and forget trap. The idea that property is passive is absolutely not. The most successful landlords, they review their rents, they optimize their expenses, they keep their properties fresh, and they build relationships with their tenants because property is an active investment. And if you treat it as such, you will outperform every single time. This is our use case for this evening. It is a live active deal at the moment. It's deal number 99. The purchase price for this property is 39,995. So it's below the stamp duty threshold. So there's no stamp duty on this property. The refurb, it's a back to brick refurb. So 2 to 4 bedroom, including your furniture. So that's all your white goods and furniture. It's 5-piece for the bedrooms, including your communal areas at 35,600. The valuation on this property is 90,000. We've sold 4 properties within a half-mile radius at 95, so we're very confident on our numbers. The monthly profit on this is about £1,000, and your annual profit is about 13,000. That represents an 81% of your capital employed. I mean, that's phenomenal. And with a 20% yield, no bank offers you that type of return. Let's be honest. That's just the reality of where we are today. And this is the type of deals that the Northeast offers on a very, very regular basis. But the real story isn't the numbers. This deal succeeds because of the location. We know exactly where people want to live, work, and commute from. And of course, it's part of that regeneration story that's going on across the Northeast. And the exit strategies on this, the great thing about that particular use case, there's 5 exits. It could be a standard buy-to-let, it could be an HMO to let, it could be a flip, it could be rented out to a rent guarantee company, it can also be rented out to a charity. These are some of the exit strategies we work with our investors on a regular basis. And that's what turns a cheap property into a wealth building asset for the long term. These are some of our success stories, and you can find these on Google or on our own website that is working with us as an investor, and of course on Amazon for the Property Deal Finders Handbook. I must be honest, with the Property Deal Finders Handbook, I wrote that book for people like me. When I first started in property, there's just too much noise. You know, I invested a lot of money with several training academies, and they're good, they're bad, and they're indifferent, right? So you've got to pick the ones that works for you and figure out. And for me, this book is all about these 4 pillars, and those 4 pillars are having a proactive mindset. You know, because in this business of property, it's very hard and it's very, very lonely. A lot of us out there are doing this on a day-to-day, and we understand how lonely and how difficult it is. I've also created a system around off-market sourcing and how to source deals. And then there's a system that we've put in place. So think about systemization of your business. I mean, a lot of you turned up tonight because of that system. You know, we have a marketing system in the background to attract people like you to join our webinar. And then, of course, there's due diligence and negotiation. Those are the 4 pillars that's required for property investment today. And in fact, this book was written in such a way that you don't need to work with people like me. You know, if you want to do this on your own, that is exactly why we wrote the book. But let's take a step back. You know, the Northeast is most definitely affordable. It's delivering exceptionally strong yields. And it's regeneration at scale that is reshaping the Northeast for decades to come. If we take a look at the south, we've got the Teesworks project, south of Hartlepool, I apologize. To the south, we've got the Teesworks project that is creating upwards of 15,000 jobs across that site. That's excluding the multiplier. To the north, you've got the Hollywood Studios that's creating 8,500 jobs. And with that multiplier, it's upwards of 30,000 roles that's being created. And of course, Hartlepool, with its own regeneration story, is right in the middle of this. So it's a perfect opportunity. And that is exactly why Hartlepool is our hotspot tonight. Because it's not just affordable, it's strategically poised to benefit and absorb from the overflow just on those 2 major projects. And this is just the beginning for us at Club Property Group. We cover 15 towns across the Northeast. And over the next few weeks and months, we'll be taking a deep dive into each one of them, and as we've done tonight with Hartlepool. So in the next 2 weeks, we'll be focusing on Blythe and its own gigabyte data center and the offshore and wind energy that's going on in Blythe. But here's the important part. We understand what we do isn't for everybody. Every investor is different. So the way we start is to have a discovery call. It's a chance to understand your circumstances, understand your criteria and your goals, and to see whether or not we are fit. So if you've been inspired by tonight and you're curious and would like to take advantage of the opportunities, book a discovery call with us and let's explore whether we are fit for you and whether or not we can build your future one property at a time. As a thank you, and to be honest, that's the end of my slides, guys. So thank you very much for staying to the very end. And as a thank you for staying to the very end, we commissioned a company in the Northeast, in fact, a UK company that wrote a 50-odd page report for us, specifically on investing in the Northeast and across the 15 towns. In fact, it was the catalyst for us to change direction and focus very specifically on the corridor that we focus. So if anybody's read a McKinsey style report, it has the pros, the cons, what strategies work, what strategies don't work, what postcodes and so forth. I'll drop the Hartlepool, they've broken it down by the town. So there's 15 towns. So I will drop the Hartlepool report into the WhatsApp community. So if you'd like a copy of the WhatsApp community, please scan the QR code and join the WhatsApp community. And I'll drop that report in there as a thank you for tonight. And then if anybody would like a copy of the book, if you are a Kindle Unlimited subscriber, we're running a promotion with Amazon at the moment where you can actually get the book free of charge. And what I will do is I'll drop that link as well into the WhatsApp community. So please scan the WhatsApp. And thank you very, very much, everybody, for staying to the very end. I'll now open up the floor to some Q&A. Thank you. I'll leave this on the screen for a few more minutes and then we'll take it off at the very end.
Hi.
Hi, Jagdi.
Hi. Thanks a lot, Kishan, for the presentation. I'm based in Ireland and I have a property here. Good idea about the property rates here, but I have no idea about UK. So I'm just curious to know, like, the area you mentioned. Firstly, are we talking about residential or is that commercial properties? And then what are the starting rates?
Sure. So if we go back to the slide that I presented with the actual active deal, this is a residential property. It's a 2-bedroom converted into a 4-bedroom. These are the type of properties that we come up with at the moment. So the average price range is between the 39 up to less than 100,000. So it's definitely less than 100,000 in terms of purchase price, including your refurb. And those are the type of properties we find. And again, we'll work with you with the right strategy. So I think the important thing is to try and book a call with us and see if we can find the right strategy for you to see what works.
Okay.
In the UK. So and again, we only focus on a very specific corridor. There's 15 towns, and the reason we focus on those 15 towns, in fact, I'll happily mention the 4 projects that we talked about 2 tonight, which is the Teesworks project and the Blythe data center. There's also HMO Treasury, and this is the great thing about HMO Treasury, which is a government-funded organization that's moved up to Darlington. They're looking to move up, I think it's like between 15 and 19 offices over the next 24 months. They're looking to move up into the Northeast. So the great thing about the Northeast at the moment, and the final project is, and then in 2 weeks' time, we're talking about the Blythe offshore and wind energy, which is an active project, and the data center that's being built up there. Of those 4 projects that I've mentioned, the only one that hasn't broken ground, in fact, the 2 projects that hasn't broken ground, is Hollywood of the North. Planning was approved for that. And then planning has gone in for the Hartlepool, I think it's called X Energy. They're looking to build 12 nuclear reactors in Hartlepool. So those are the different project going on there that's creating the tenant demand, for the different tenant type of profiles. In fact, I've got one of the investors that invest with me on the call that's joined the webinar tonight. Her name's Jade. Jade, sorry to put you on the spot, my darling, But you
Hi.
one of the projects that you're working on, your project, as
Yeah.
to why you decided to work with me.
Yeah, so the reason I decided to go with you, I've spoken to quite a few sources, done loads of different webinars, loads of different sort of 2-day courses and things like that. And the service that you provided, it's not just a sourcer. You sort of sorted everything from putting me in touch with the right mortgage broker, putting me in touch with the right solicitors, furniture packs, builders. It seems like it's more of a package rather than most sources. It's like, here's your deal, off you go kind of thing. Whereas if I'm new to this is all very new to me. It's nice to have somebody to kind of hold your hand. I
Yeah,
would say, and that's just me being completely honest. It's nice to have somebody to go to if you're stuck with something or you're unsure what's going on, because yeah, property is a bit of a minefield, and I'd like to be able to do it myself one day, but it's nice to maybe have somebody there to help you pick the right areas, and I've got my fingers crossed that it's all going to go well.
But let's be honest, Jade. I mean, even with the projects that we're doing together, it's not been smooth sailing all the way. We've had our problems, right, with the
Oh yeah.
I mean, there was a project that fell through. There was quite a few things that went wrong, but we got there in the end, and that's why we're still working together. It's because
Yeah, exactly.
it's smooth sailing, and I think the perception that
Property isn't smooth sailing. I knew that. Well, I didn't go into this with my eyes closed, thinking it was going to be a bed of roses. Things go wrong, but it's okay. You muddle through. You get there in the end.
exactly perfect. Thank you very much, Jade.
No problem.
Yeah,
Excuse my voice.
no problem. I hope that answered your question as to the kind of things in terms of the properties we go after. So there's a few other options. So we do cover the bigger HMOs where you can go from a residential to a commercial type scenario. So what would happen is you would purchase a property on a commercial valuation. So, but it's based on the rental income. So that's the important piece. Generally, that is with planning permission. So like the particular project we were talking about is a standard buy-to-let mortgage that's required for that. There's no special mortgage required for that. Although it's the broker that we're working with likes HMOs, but it's what they class as a minimo. You wouldn't be able to get a commercial valuation on a 4-bed. What they look for is 6 and above. It's when you change the use class, because the standard house that you live in is the use class is called C3. It's residential. So you can do building works internally on the project under what they class as permitted development. But if you decide to, for example, to go for 6 and above, so when it's an ensuite, that property then changes from a C3 to a C4. And what that means is that property can no longer be classed as a residential property once you've changed the use class. And then one step further, which is sui generis, and that requires planning permission. So you can get away up to 6 bedrooms, 6 bathrooms in a property with permitted development. But once you go down 7 bed, you need planning permission, and the planning status changes from C4 to what is classed sui generis. That's the difference. And that's when you can get those commercial valuations that you were talking about.
Got it. Thanks a lot.
No problem. Any other questions, guys? Bevan, did you have a question, or did you just Bhavin? Was that Bhavin?
Yes.
Sorry.
Hi, Kishan. Yeah, that's
Yeah.
Bhavin.
Sorry.
Yeah. Hi. Sorry, I joined a little bit late.
No problem.
But no, very engaging presentation. Those of you who don't know me, I have spoken with Kishan earlier, and I've been following up with Kishan. It's just haven't had the chance yet to work with him, but I'm looking forward to. However, I'm doing my research and reading a lot of things about Northeast properties. Being a Londoner, I must say it's a foreign land for me.
North of the M25 is north for you, eh?
Yes, but no, this is more of a question for, let's just say, what will be the entry point for investors to coming in?
Sure. So, most investors coming into this territory are looking at between 50 and 100K is what you need if you're buying cash. If you're buying with a bridge, something we do quite a lot. We work with exclusively with bridging lenders that they look for 25. They want to know you've got skin in the game. So you can go for something called development finance. And what that looks like is so long as you have a 25% deposit and at least 25% of the building costs, a broker would be able to find you a deal where they would be able to find you funding for the build cost as well. So you'd need 25% for your deposit and 30% upfront for your build cost, and the 70% will be tranched. The reason for that is, when a builder goes in, they need some sort of cash to start the project. And you could put in a rock and a hard place in terms of funding, because a bridging company won't release funds, that first tranche of funds, until the work is actually completed to get from point A to point B. So they'll release funds at point B, but they won't release funds for you to start your project. So once you get to point B and they've released the funds, then they'll get to point C, they'll release the third lot of funds, and then at the very end, they'll release all the funds for the build cost. So that's how you can get away around the idea of not having the 100K up front, so long as you have 25% deposit and 30% of the build cost up front. And of course, all your additional costs, right? So your sourcing fees, your solicitor's fees, all of those little bits and pieces you've got to have in place.
Thank you.
No problem. Any more questions? Perfect. I mean, if there aren't any more questions, like I said, if everybody joins the WhatsApp community, I'll happily drop in the report and the webinar link the link for the book. I apologize. But yeah, I'm happy to give you some time back. I hope it was useful tonight, guys. And if there's anybody that wants to have a one-on-one, feel free to message me, in the WhatsApp community, and we can take it from there. But I'm more than happy to sit down with anybody, and we can go, and have a one-to-one conversation. Gareth, you asked a question in the chat. What was that? Thank you, Shan. Thank you for the presentation. I'll get in touch with you. Okay, thanks. Thank you very much. I appreciate that, Gareth. We'll have a conversation. Anybody else got any questions before I let everybody go?
Thanks, Keishan.
Thanks, Jade. We'll speak to
Bye.
you in a week. Perfect. Thanks, everybody. Have a good evening. Bye-bye.